Okay, so welcome to part three. This is where I just give my sort of look at what's going on around the world. Hopefully it gives you a little bit of insight and helps you with some of your decisions. Okay, so start off with a little bit of data, I suppose, to a degree. So the US stocks had a good week. I mean, it was a positive week, 5 up days for them. And, so that data was working well for them. And it looks to me as though the jobs, not just in the US, but in sort of lots of other countries as well, are slowly dropping. And I think, you're going to see job offers sort of evaporating over time, but you're also going to see job losses increasing over time as well, definitely through 2024. So that helped stocks as well, because it seems as though they will not need to borrow as much as was expected, and that helped to push the 10-year yields lower. They'd reached that sort of magical 5% everyone was focused on, and now they're just over 4.5%. I wouldn't expect them just to keep dropping. But again, over the last few weeks, what have I been saying? For me, putting money on deposit, getting a guaranteed fixed return for years to come is quite attractive. And what you're receiving is probably on par, if not a little bit better, than what you're getting from the stock market at the moment. And of course, you've got that volatility to manage as well. And then gold dropped early in the week before recovering, and it closed back pretty much at $2,000. Now WTI had a drop. It went from 85 to 80 in the second half of the week. Again, it's just coming to the fact possibly that even though Israel's gone into Gaza, and they're very controlled, have a solid strategy of what they're doing and how they're doing it. Still loss of life, which nobody wants to see, but I think at the moment it's holding back other nations that would perhaps otherwise have got involved. Obviously, it's not going to stop the militias in those countries. They're still going to do their own thing, but of course, that's at the moment we're seeing oil ignoring the potential for any disruption to supply, and it's focusing perhaps a little bit more on the fact that we're seeing, or there's the potential for demand to drop. And of course, the dollar weakened as more data came out last week. The sense is that they're pretty much done now with rate increases, the Fed. We'll have to wait and see, because obviously there's still so many factors that could come into play. They're more geopolitical than economic, though, I would say. And of course, we're seeing those savings now sort of evaporating from people's accounts, what they accumulated over COVID. And as much as I'm a massive supporter of the US economy, I do get that sense now that it's going to begin to move lower. And as I say, I am a big fan of the US economy, and the way they act, and the central bank and all that. They do a reasonable job. I'm not a massive fan of Powell, but he does again a reasonable job. But possibly all the rate hikes have been done now. Of course, we're still not seeing those final impacts of rates that have been done hitting the economy, and of course, borrowing is more difficult as well, so that's almost like having another rate hike. And when we talk about those, then Bank of England left rates unchanged, although it was a 6-3 vote. So again, if inflation starts to pick up, that could lead to another rate hike, but it's a matter of whether the economy can take it. So although in the US the economy may have peaked, I think Europe's peaked a long time ago now, and it's been falling for a while, and I can see this getting worse in Europe. And quite honestly, I just think that recession is around the corner. Those rate hikes are having an impact. Much higher prices over the year are having an impact as well on consumers and on household spending for sure. That disposable income has really been sort of eaten away at. So a lot of countries rely on China. They've been adding stimulus, but it's been having sort of limited effect. And again, that sort of makes you wonder where any new demand can come from. I suppose the only country that comes to mind for me is India at the moment, because they've got a very strong economy as well. So although it's nothing major yet, this unemployment levels are starting to creep higher. But quite honestly, I think they're going to pick up pace into 2024. So I expect quite a few job losses. And, as I say, the job offers, I think, will just start to disappear as well. People will just do with what they got. And if demand obviously reduces, then they need less staff anyway. So that economic downturn could pick up pace, which will impact demand. Inflation is cooling. It could actually hit 2% if the downturn accelerates. Again, we'll keep changing our minds of when something's going to happen, because conditions keep changing, data keeps changing. At the moment, I think quite possibly they could actually hit their target by the end of 2024. There's 2% inflation rate, but nearer it gets to it, the stickier it becomes. So whether it will or not, you can't say at the moment. But I do still believe that there are recession dangers, but they will be head on by the central banks, because that higher for longer is going to stay there. I've been sort of saying this for so long now. And again, maybe the second half of next year things might sort of look as though they're about to change. But I keep posting it, I keep saying it, that for me they're going to want to see inflation at 2% for at least 3 to 6 months consistently before any thoughts of any rate cuts enter the debate, really. And of course, even then, they're going to be sort of slow and small as far as I'm concerned. Now, geopolitical tensions could still overpower those economic sentiments, but it's only time that's going to tell. And as I mentioned earlier, I still consider fixed income rates to be attractive against stocks, but just remember that is only my personal view. Any long-term trades for me, option strategies are really good, because they remove that need to micromanage the risk. You can carry them overnight, you can carry them over weekends. You've just got to be right before they expire. And if you're not sort of understanding them, I do a course on options and I simplify them as well. You don't need to have a deep understanding of the Greeks to be able to trade options. And of course, just because you buy an option, it doesn't mean that you have to be long of the market. You can buy put options, which give you the opportunity to be short of the market. And of course, everything we do is to support traders and help them. So, why not try one of our workshops to learn more? So that's pretty much it. Or do a full course if you really want to get that in-depth understanding of the markets. We're always here to help wherever we can. So in part 4, we're going to cover some technical analysis as usual. So we offer newsletters, we offer workshops, 1-week courses, our comprehensive masterclass that's really going to help you. Apart from gaining all that fundamental knowledge, you get to spend 20 trading sessions with me, practical sessions. So that's I'm not saying I'm going to turn you into a massive trader in 20 sessions, but getting that sort of feedback from me, that insight from me, is valuable. Now, other things that we offer are trader mentoring,
We consult to companies on FX and commodity exposure. Of course, we provide a massive educational content to individuals, exchanges and brokers. If you feel underfunded, why not give the trading challenge a go and see if you can get that funded account? You know, maybe you're underfunded, maybe you don't want to risk your capital, which is quite understandable. And of course, one of our courses now includes a free attempt at the trading challenge. If you would like to find out more about anything, then contact us at info@symaxfintech.com or directly to me at chris.tubby@symax-int.com. Okay, so now we're going to go into the technical analysis section. So I hope you join us for part 4. As usual, we start with our disclaimer. So trading involves the potential risk of loss of capital. It's not suitable for everyone, although hopefully it is for you. When it comes to leverage, just be careful because you can lose substantially more than that initial investment. Everything we include in here is just purely for educational purposes. We're not trying to provide you with advice. We're just trying to help you prepare, understand the markets better, to help you make better decisions. But of course, if you are looking to invest or trade, that has to be your decision. And before you make that, you should consider your financial situation, your level of experience, and your risk appetite. And of course, on your risk capital, you're prepared, but more importantly, can afford to lose. If you've got any doubts whatsoever, seek independent financial advice before risking your capital.